a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about autocallable ETFs. These are very new, these pay high dividends, high coupons, and that is why they are very popular with investors and they are complicated products. So it's important that we understand how they work. So let me share my screen and talk about these autocallable ETFs. So in general, we have seen a surge in interest in ETFs that pay high income, and investors have been flocking to ETFs that use options to generate high payouts. And recently, there has been a surge in new products. Providers are developing innovative ways to package derivatives and other complex products within ETFs to meet these growing investor demand. Now, autocallables, these are not new. These are very popular among high net worth investors, and these were previously not available in an ETF wrapper. They were available only in form of structure notes, which wealthy clients, wealthy personnel could use. And we know that ETFs have democratized investing, and many complex strategies which were earlier reserved for the ultra wealthy are now accessible to retail investors in a low cost, transparent structure. So, what is an autocallable? So, autocallable is a market linked instrument that provides periodic coupon payments and then returns principal at maturity or earlier if autocall. As obvious from the term autocalled, it can be autocalled before maturity, and if it can be autocalled if the index breaches the barrier. So in essence, it functions like a bond whose income and principal payment depend on equity markets staying above specific levels. And payments continue, those coupon payments, and if the index remains those specified barriers. Now, what is the trade off? Obviously, I said these are complex products, so investors should understand the trade off and also key terms. So, the trade off is that these autocallables they offer higher monthly coupon than traditional bonds, fixed income securities, but with capped upside potential. And there is the risk that a significant market decline could suspend coupon payments, and in severe cases, it could also result in principal loss. What are the key terms that investors should be aware of? So, there is a referenced index, which is the benchmark which determines coupons and principal protection. Then you should remember the coupon barrier, 30% or 40%. So you receive payments as long as the index remains above that level. Payments stop if it is breached. And then the principal barrier, if the index stays above that level at maturity, the principal is generally preserved. If not, some principal may be lost. So the first autocallable ETF was launched by Calamos, and this has seen a lot of interest, and this already has more than 400 million in assets. And so, what this ETF does, this is backed by JP Morgan and launched in June. And the structure is that this replicates a portfolio of autocallable notes, which are linked to the S&P 500, specifically the Mercube US Large Cap Vol Advantage Index. And it holds a ladder of about 52 autocallable notes, which are maturing weekly, and this enhances diversification, reduces risk. Now, coupons are paid monthly, and each of these notes pays a monthly coupon if the index doesn't fall those specific thresholds. In this case, it is 40%, and the coupon level is currently around 14.2%, but it varies with maturity. And then you should remember the autocall feature as well. So after 1 year, each node is evaluated. If the index is above 100% of the start level, then the node is auto-called. Investors kind of receive principal plus coupons, but actually the capital is reinvested by the ET provider into a new node. If the index is above 100%, then the node remains active and continues to pay monthly coupons as long as the index stays above that barrier, and it can continue to its 5 year maturity. And at 5 year maturity, again, if the note is not auto called before that, then the investor's principal remains exposed to any index decline from that 100% starting level. Now, if you want to learn more about this ETF, obviously this is a complex ETF, so you can go to the code page on zax.com, and using the link, you can go to Calamos webpage for this ETF. They have described it very well, and uh, how this ETF functions. So currently, the weighted average coupon is 14.3, and this will explain the coupon and principal barrier as well. The expense ratio is 74 basis points, and the inception date is June. Now, recently, Calamos launched another ETF, which is linked to the Nasdaq 100. So volatility, and the name is Calamos Autocallable Income ETF. The ticker symbol is CAIE there, and in this case, the barrier is the coupon barrier is for the Nasdaq one. The coupon barrier is 30%. For the one linked to the S&P 500 index, the coupon barrier and the maturity barrier both are 40%. For the Nasdaq one, 30% for both. And the yield level is slightly higher for the one linked to the Nasdaq 100. And in fact, here on this chart, Calamos shows the yields paid by these autocallables versus other sources of income. So at the S&P 500 Dividend Aristocrat Index currently has a yield of about 2.6%, and equity derivative income funds like JEPI, which have been quite popular, around 8.2%, and for the ETF, the first one that they launched, around 14%. The recent ones that they launched, the one linked to Nasdaq 100 volatility, about 18%. Now, after Calamos, Innovator also launched an ETF. This is Innovator Index Autocallable Income Strategy ETF. The ticker symbol is ACII. Now, the difference is that in this case, this holds laddered swap, which are linked to S&P 500 ETF via SPY, NASDAQ 100 ETF via QQQ, and the small cap ETF, which is IWM. And the fund's performance depends on the worst performing of these three indexes. And obviously, if the markets rise or stay flat or fall a bit, but remain above the barrier level, which is 30% in this case, investors receive the full coupon. And in other ways, this will function somewhat similarly to the Calamos and products. Obviously, there are two now, but this is tied to the worst of these three indexes. Now, just important to remember because the Russell 2000 is historically more volatile than the S&P 500 and even Nasdaq 100, the S&P 500 and the Nasdaq 100 indexes. So may, by holding this ETF, you're kind of betting that small caps will not suffer a deep decline. Even the S&P 500 and the Nasdaq perform well. And again, you should remember who should consider these ETFs. These are suitable only for investors who need high income than traditional bonds. And you should hold a neutral to slightly bullish market outlook. You expect the markets to, move sideways or rise gradually, but not suffer a deep, severe decline. And you are comfortable capping your upside in return for these steady payouts. Now, again, if you want to learn more about the Innovator product, you can go to our website, and using the link, you can go to Innovator's webpage for the CTF. And interestingly, Innovator has been acquired by is being acquired by Goldman Sachs, that we learned just this week. Now, this product has an average coupon of 9.8%. Currently, the expense ratio is 79 basis points. Hasn't been quite popular yet, but I wouldn't rule out whether Innovator products at all. They have been so successful with their buffer products. Distribution frequency is monthly again, and you receive a coupon if this 30% barrier is not breached. Now, these all products are very new, so there's no performance, there's no use comparing the performance of these products. But I saw this uh, performance history of Mercube index that Calamos products track, and the one which is linked to the earlier product. I saw that since inception, the index has slightly underperformed the S&P 500 index, but over the past 10 years, the performance is pretty much similar, just a slight underperformance versus the S&P 500 index. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Make sure to subscribe so that you do not miss any of our videos. And I will see you next week.